At the start of 2025, my portfolio stood at £512,000, but just 6.5 months later it now stands at £620,000. How on earth has this happened in such a short space of time, and is compounding finally starting to go exponential? In this video, I'll run through my complete portfolio and how it's been performing. I'll also reveal what I've been buying so far this year and my plans for the months ahead. All the data you see in this video is correct as of the 23rd of July 2025. I'll go through each sector in ascending order of performance so far this year. This is not investment advice and I'm simply showing you my own journey. My worst performing sector this year has been the industrials, and I have two companies, Bunzl and the chemical specialist Croda. They have performed dreadfully this year so far. As I go through the slides, this figure is the year-to-date average change in value of the shares in a given sector within my portfolio. It's a weighted average based on the value of those specific holdings. This figure shows the current size of my holdings for each company. Here is the year-to-date price change for that company, and here is the yearly dividend yield. I recently bought into Bunzl when the share price collapsed a couple of months ago, hoping to snap up a long-term bargain. Croda has been a complete disaster for me ever since I bought it. Just goes to show you can't win them all. I think we better move swiftly along. In the consumer goods sector, I have three companies and they are all down an average of 10% this year. Diageo has had a terrible few years, including several profits warnings. Unilever is faring somewhat better but still in the red. Haleon, which used to be part of GSK, is also down in 2025. In the renewable energy sector, I have just one company, Greencoat Wind Energy, and it's down 2.7%. Things were much worse earlier in the year, but it's beginning to recover. The dividend is very high at 8%, and I'm happy to hold for the long term. It's also a quarterly payer, so that's 2% every 3 months. Not too bad at all. Now for my S&P 500 ETF. Surely that can't be in the red as well, can it? Well, I'm afraid it is, down 2% this year. It pays a small dividend of 1.2% spread over 4 payments. The ETF I have has the ticker code IUSA. As you'll see later, I've been buying plenty more of this ETF while prices are lower. In the brokerage services sector, I have two companies and overall it's more or less unchanged. IG Group pays a decent dividend of 4.4% and it's up 6.5%. And what's more, it's now the third largest company in the FTSE 250. Could it possibly get promotion to the FTSE 100? We'll have to wait and see. The London Stock Exchange Group has experienced a disappointing year, down 9%. In the mining sector, I have just one company, Rio Tinto, and it's more or less unchanged this year. It pays a very nice dividend of 6.5%, and as you can see from the graph, there is a bit of an upward trend recently. I'll be keeping an eye on this one. In the pharmaceutical sector, I have two global giants, AstraZeneca and GSK. Both are up slightly this year. GSK pays a much higher dividend. These lumbering giants will never smash the lights out, but on the other hand, they probably won't go bust either and should continue to churn out reliable dividends for many decades to come. Now for the house builders, and I have just one company, Persimmon. It's up slightly this year. I've only got a small amount invested here, but I like to keep an eye on it and I intend to buy on the dips. Now for my global ETFs, and I have 3 of them. VWRL is basically like owning the whole global economy in a single share. VHYL is similar but focuses on companies paying higher dividends. And finally, I have my current favourite of the 3, which is VEVE, and this one focuses on companies in developed markets. I've been buying plenty of this one while prices are low. In the oil and gas sector, I have 2 giants, BP and Shell, which are up 3% combined. Oil and gas is another cyclical sector, so expect a roller coaster ride. The dividends are decent, however. I've been buying more BP recently, especially when I see a share price fall. There is even talk of it being a takeover target, so I'm keeping a close eye on this one. In the information technology sector, I have 3 companies and they are all up an average of 7.9%. The dividends of these 2 are very low, ideal for keeping outside the ISA. There just isn't enough room to keep everything inside. Sage is slightly down on the year. This is another one I keep in my general investment account. Now for my final exchange traded fund, and this one has performed the best for me so far this year. It's the FTSE 100 and the ticker code is ISF. It's up 10% and pays a dividend of 3.6% spread over 4 payments a year. The FTSE 100 has performed very well this year compared to other indices. Perhaps investors are beginning to see opportunities in the UK market. In the utility sector, I have 3 companies. National Grid is up 11% and pays a decent dividend. As you can see from the graph, SSE is on a nice run lately, up over 19% on the year. United Utilities is also doing well and pays an above average dividend. Now we're into the top 5, and in the food and tobacco sector, I have 3 companies. The sector as a whole is up 14.6%, and these two are not only seeing a decent share price rise, but they also pay rather large dividends. Tate & Lyle, on the other hand, has been a complete disaster, down 18.5% so far this year. At number 4, it's the retail sector, and I have just one company, Tesco. It's up almost 15% at the time of this video. It seems to be a leaner, more focused business these days, and I'm happy to hold for the long term. The dividend is fairly average for a FTSE 100 company at 3.2%. At number 3 is the banking sector, and I have 3 companies. On average, the sector is up an incredible 30% this year. HSBC is up 20%, Barclays is up 30%, and Lloyds is up 40%. Their dividends aren't too bad either. It's been a fantastic year for the banks. But surpassing even this, at number 2 is the insurance sector, and I have just one company, Aviva. It's up 34.5% this year, and the dividend is high at 5.6%. I've been buying more of this one. Aviva ticks a lot of boxes and seems to have real momentum. When I started my portfolio back in 2009, it was Aviva which paid me my first ever dividend, and so started my compounding journey. And at number 1 for longer than I can remember is defence and aerospace. I have 2 companies and they're up an average of 65.5%. BAE Systems is a company in high demand as countries around the world boost their defences. Rolls-Royce has been my best purchase of all time. I started buying it a couple of years ago when the shares dipped below £1, but now they're approaching £10 a share. I've even sold and got back all the original money I put in, and it is still the largest holding in my portfolio. Rolls-Royce has also started paying dividends again. If you are thinking of starting your own portfolio like I have, then Trading 212 will give you a free fractional share worth up to £100 if you sign up using the link in the video description. So what have I been buying and selling this year? With my portfolio now paying over £1,400 in dividends per month after tax, I don't always need to deposit new money to buy more shares. My biggest purchases in 2025 has been the S&P 500 ETF. During the downturn early in the year, I put more money into it than I would normally do, and I even tapped into savings set aside for market crashes. I've also put more into 2 of my other ETFs. Regarding individual companies, BP and Bunzl have both suffered dips in their share price this year, and so I bought more while they were cheaper. BP, Aviva and National Grid all paid decent dividends, and that was another reason I put more into those. The only sale has been Rolls-Royce. Unfortunately, this one is outside the ISA, and so I've sold a few to use up my capital gains allowance. Every month I reveal all my buys and sells, so why not subscribe to the channel to keep up to date on what I'm doing. And now for my plans for the months ahead. Well, I intend to purchase more of the S&P 500 and Developed World ETFs, especially as the prices are rather subdued at the moment. I'm keeping a close eye on BP and may add more if I see an opportunity. Aviva is another company I like at the moment because of the high dividend yield and upward momentum in the share price. I may even take a look at Legal & General. Another company on my watch list is Rio Tinto, and if I see some upward momentum, I might consider adding a bit more in. If you are finding this content useful, then I'd really appreciate a quick tap of that like button, as it really helps out the channel. Cash in the portfolio currently stands at £500. Now for the performance so far in 2025. At the end of 2024, the portfolio stood at 512,000. As of the 23rd of July 2025, the portfolio stands at 620,000. 22,000 of new money has gone into the platform from wages and savings. Because of the low share prices early in the year, I've utilised a lot more of my savings to add more money in than I normally would do. We have seen some rather volatile times this year. So my year-to-date net gain, which is basically over the last 7 months, is £86,166, which equates to a net percentage increase of 16.8%. So despite the stock market chaos this year, the portfolio performance has been quite strong. Of course, this is unrealised gains, as I haven't actually sold my shares and taken profits. I'll now compare the performance of the portfolio this year with other indices, and to do this fairly, I'll strip out any dividends I've been paid so far this year. With dividend payments subtracted, the share price growth alone is up 14.9%. You can see in this table the portfolio has outperformed the FTSE 100, 250 and all share index, and it's also beaten a typical S&P 500 ETF and an all-world ETF. I don't expect to always do this, however, and things can change so quickly in the markets, as we have already seen this year. Now for my overall performance since I started in 2009. I made plenty of mistakes in the early days as I was learning the hard way, and all my figures include everything. I try to be fully transparent. The total amount I've put in from my wages since I started is 299k, but I didn't put this all in one big lump sum. I only started with £5,000 at the beginning, and then I proceeded to drip feed in spare money each month. As you have seen, the value of the portfolio now stands at around 620k, giving me a current net gain of 321k or 107.6%. Many investors will have done much better than this, of course, and I'm only showing you my own journey. If you don't already know, I've created a pie on Trading 212 which is based on this portfolio. I don't necessarily recommend you copy another person's portfolio, as what might be suitable for one person might not be suitable for another, so it's really just for reference, and to perhaps keep track on any significant changes I make. I'll leave a link to the pie in the comments section. Not only does the capital of my portfolio grow over time, but it also pays a stream of dividends, which I find really motivating. Last month I received more dividends I ever have before. It really did go bananas. To see that video, just click here.